It's Sunday. A little bit before 5 p.m. Central Time, the best time. You know what that means? It's time for Tasty Live's evening show, the first call. My name is Victor Jones, but you're not here for me. You're here for the one, the only, the founder, the creator, the sun, the moon, and the stars, Mr. Tom Sosnoff. Tom, how you doing, my friend?
Tell your story walking. I'm good. I'm ready to go.
I'm ready to go, too. I don't know whether to be super excited or terrified going into the week, Tom. You want to play a little game? It's called Drone, Domestic, International, or Extraterrestrial. What's the answer, Thomas?
I don't understand the question.
You don't? Some part of me knew. You know the context of this, that you are just completely oblivious to the drones off the coast of New Jersey, hovering over New Jersey. You haven't heard anything about this?
Oh, yeah. Yeah, I did, but I don't care. Why? What are you trying to do? Say.
I'm gonna make this partially market related. Do you own any drone stocks? I do.
I do not even know. I couldn't name a drone stock if you wanted me to.
Oh. I've got like the delivery ones though. I was investing for the world where you push a button on Amazon and they just drop, whatever off in your doorstep. I think it's Joby Aviation, Joby, and then Ehang is a Chinese company. I think military drones, that'll be where the vol is this week, baby.
I do not have any drone stocks, and I don't even know if I've ever traded one.
Tom, how's your weekend, man? And while there's drones flying over the East Coast, I bet don't even care. My man Tom Sosnoff was out enjoying his weekend, putting on extravaganzas. Is that true?
I'm going to tell you something. I don't like it when drones fly around in my neighborhood. Like the kids. I know it's just kids in the neighborhood. They're just like, they're just fooling around. But I don't like it.
I agree. Isn't it outlawed in Illinois?
It could be.
I think it is. Chicago, we've always got those extra regulations. Did you have a good weekend, man?
Yeah. I had a really good weekend.
All right, let's get this show on the road. I think they opened them up a little bit.
Yeah, they just opened. S&P's.
That's on me.
Yeah, their S&P's down 250. We started a couple minutes late, so sorry about that. S&P's down $2 actually. Nasdaq down 20. Dow's basically unchanged. Russell's unchanged. Bonds are up 4 or 5. They were really weak last week, and rest of the market, gold down small, Bitcoin up pretty big, new high 104.
Up and away, baby. Natural gas continues to be the one that moves on Sundays, whether it's up or down. The vol on Sunday opens has been in natty gas down 2% here.
Yeah, I think that's just winterish, but in the end, it doesn't seem to go anywhere. So you're better off not adjusting on Sunday night.
That's true.
That's all I can say.
That's very true.
Because it hasn't worked to be an adjuster. Yeah, actually, I don't usually trade digital assets on the weekend, but this weekend I sold some about 2 hours ago. Sold some Bitcoin, sold some ETH, just selling some longs here. I think that this is the weekend where it jumps the shark.
Famous last words.
Yeah, I know.
Famous last words.
That's just
why you just what is it about this week? You just like the price action? 104.
No, I think it's a combination of like putting MSTR into the Nasdaq and and if you just look around, I don't think if you polled 1,000 different analysts or people that trade this stuff, you'd have the amount of bullishness would be 1,000 to 0.
Probably, yeah.
And so that's just a hard nut to maintain. That's a hard kind of momentum to maintain. I'm not saying it's going to go down right away, but I don't like the risk reward here.
Let me ask you. You just mentioned MSTR. There's a bunch of changes to the Nasdaq. What's Tom Sosnoff's take on adding MicroStrategy to the Nasdaq? I mean, this isn't a company with like their core business is nothing, right? It's next to nothing.
They don't have a business.
This is all about effectively adding a leveraged
it's
Bitcoin
a buy the rumor
to the Nasdaq.
Yeah. It's a buy the rumor, sell the news thing. So it's just like, remember, people have short memories, but they added SMCI at the top.
That's true. They
Let's
removed. Yeah.
let's remember they had an SMCI where it dropped from 1,000 something down to the equivalent of $200, and they have the Nasdaq has a brilliant history of you know trying to manipulate their index so it never goes down. So I think you can. Not tomorrow on the opening, but within a couple of days here, you can sell Palantir and MSTR. MSTR is trading with a 230% premium to Bitcoin. At some point, it's got to trade, it's going to trade closer to fair value. It's got 200% premium that could come out of that. It could trade at a discount. And I don't see it trading with much more premiums. And I think the reason it was trading with a lot of premium is because people thought it was going in the Nasdaq. So I think I think it opens on its high tomorrow.
What? Yeah. I don't want to go too complicated.
No, I don't want to go too deep into it. I don't really care.
What I was going to say is, wouldn't it be more interesting to do some sort of basis between like long Bitcoin, short MSTR if you're trying to play just the.
Unfortunately, you can't because in theory, if you had a ton of money and you were okay with the swings, I think you actually would come out pretty good on that over time. But on a short-term basis, I don't even know if there's any correlation. That would not be for the faint of heart. That would not be, that's a tough trade because you can only trade it one way too. You can only, since you can't short Bitcoin, you can only buy MST. I don't know how you do it because you can only buy Bitcoin and short MSTR. That's all you could do. It's just a one-way trade.
To Tom's point here, just in case somebody hasn't seen the announcement last week, Palantir, MicroStrategy, and I believe the actual one is Axon Enterprise, AAXN, is getting added to the Nasdaq. The three that are being removed to be replaced by those three are Illumina, SMCI, and Moderna. The last two of which were just added recently within the last year or so.
And if you look at SMCI, like I said, from the top it dropped 80% when they put it in. If you look at Moderna from the top, it dropped 80% from when they put it in. So I mean, like people always think, well, going to Nasdaq, should be Fat City, but though I don't know Lumina, whatever it is, I don't know about that stock. I haven't really tracked it, or followed it or traded it. But those two other stocks, I mean, Moderna is trading on its low, SMCI is trading just off its low. That's two underlyings, that lost 80% from the high when they went into the index. So don't, I see the same thing happening to MicroStrategies and Palantir.
I haven't looked at the Nasdaq, but when I looked at the S&P, the 1 year forward returns after the add and the 1 year forward returns after removal were like actually contrarian. So some part of me wonders, now that these three are being removed from the Nasdaq, whether the contrarian play is to also look at potentially having some upside deltas within a year. I'm not particularly interested in SMCI at this level, nor am I interested in Moderna for sure, but just giving some food for thought. I'm curious on a broader level, instead of just individual stocks, how are you thinking about risk going into this week with Nasdaq 22,000, Tom, is a one-way train to the upside, 61 and change in the S&P, and vol staying muted at 1380?
Well, first of all, going back to the beginning, I actually do. I wouldn't touch SMCI here too, because I think where there's smoke, there could be fire in there, and that company could be, they're just one audit away from basically being out of business. But Moderna is an interesting play for me at these levels for 100 reasons. That stock has dropped from whatever you want to say, 120, 110, 140 down to $40. It's an interesting play for me, no matter what. But
to your point, most of the healthcare companies are on discount. Pfizer, you could name a handful of these.
Yeah.
That during the COVID period, due to liquidity, as well as billions of dollars going to these companies for whatever, a lot of those trends have been reversed. So it's not only Moderna here, but you could go to a handful of others. And now you add United Health onto those. So within insurance and healthcare, there are a ton of stocks on discount. To your point, go ahead. Sorry.
No question. But with respect to the market, this is a market that's shown no signs of like no signs of even an intraday reversal. This is a market that's shown no signs of fear, no signs of not, it's not willing to give up anything. There are no sellers, waiting above, below, I mean, there's just been, it's just unbelievable. It's almost been like limitless buyers. I think anytime you see this kind of complacency combined with and you can measure the complacency can be measured by skew, so that's easy. And anytime you see this kind of just absurd bullishness across the board, I mean, there's in order for the markets to go higher, you need to have somebody that doesn't think it's going to go higher. Like, I mean, that's the way markets work. If everybody's on the same side watching the same movie thinking the same thing, that's not going to be the way it ends. And that's what we have right now. So I just think that, I mean, of course, until this thing turns around, you to the downside, you've got nothing. But I think that, common sense says just be smart here.
Yeah. Some part of me thinks 2021 was really, late 2020 and early 2021 was this very strange period where there's so much liquidity in the marketplace. We went through stupid prices with stupid valuations and stupid relationships between instruments.
Yeah.
Some part of me wonders, Tom.
Yeah, but you remember 2022, right?
Of course.
We didn't have an uptick the whole year.
I'm with you, but we got to dumb prices, stupid dumb prices before we got to the point.
We're stupider now.
Yeah.
We're stupider prices now. And you also remember the thing that scares me is that, the first time Trump won, the market basically, in 2017 did absolutely nothing all year. And it basically felt him out for a year. Yeah, right. We had no moves over 1%. The market was completely dead the whole year. It grinded higher. It wanted to see what he was made out of, how dangerous he was, all that kind of stuff. I think in 2018, we got our first dose of reality with some violent sell-offs. And then in 2020, again, with the pandemic and everything else, we got more violence, sell-off wise. Also, markets don't really like Republican presidents nearly as much. So I think 2025 is going to be a rude awakening. And I don't know when. It could be, most of these markets, when they give it up, they don't give it up till March. So I think we could be in for a pretty challenging first quarter for the bears. But I think quarter number 2 is when it starts to get a little ugly.
It's funny. A lot of the implied curves have that exact same thing. February and March, where potential vol sits in some of these.
Well, think about it. 2018. After the year I just talked about, 2017, 2018, we gave it up in late January, early February. In 2020, we gave it up in late February, early March. In 2000, when the bull market ended, they gave it up in March. In 2000 and, in 2009, they turned around in March and went to the upside. So March is kind of like it's kind of the turnaround month, late February, March, but it could be as early as the end of January or towards the end of January. I don't think you're going to see much of anything, in the next 2 weeks or anything, 3 weeks. But after we get past option expiration in January option expiration is huge because of all the leaves that expire for multiple years. So I don't see much happening until after Jan expiration. And after Jan expiration, I think everything starts to heat up.
So what's the way a contrarian approaches the market? Because I think just thinking about it as binary every week, up or down, becomes really hard. Difficult if you have a grinding market to the upside. In my personal opinion, it seems like leaning into relationships or basis trades or pairs trades make a little bit more sense to apply that thinking versus just, is it going to go up or down? You start to play this has outperformed this, so let me go long one versus short another instead of just outright short. What do you think? How do you play this?
In a perfect world, if you could pair everything up, you could argue that like some of the pairs have a little bit of, bull delta and some have bear delta. Like I'm long Russell, short S&Ps without any, on basically on a pretty neutral basis, maybe a few delta short in that trade. But that trade is short delta. I mean, it's literally short delta. So when I, no matter what I want to think, if you're long Russell and short S&Ps, I mean, that's a short delta trade. That's it. It's just the way that thing trades. If you're short Nasdaq if you're long Nasdaq, short Russell, that's a long trade. And if you're short Nasdaq, long Russell, that's a short trade. Period. No matter what you think, it's just the way the beta of these things goes and the way these things move. The Russell just doesn't move one for one with the other two.
Final question before we bring Pete in. If I had told you, Tom, that we were going to get weakness in NVIDIA, but you were still going to get Nasdaq strength, and the Nasdaq was going to be able to power to all new highs. And last week that was the case because Google's quantum computer, there was Tesla reaching all-time highs. There was just enough in the gun, enough in the engine to sort of power this thing, regardless of NVIDIA turning weak. Would you have believed me if I told you that was going to be the case?
Yes, because we've had times in the past when Apple was the market leader and Apple actually didn't look that good and the rest of the market went higher. This is just, NVIDIA had its year of, being unstoppable. NVIDIA had its year of, being the stock that everybody had to trade every single day and everybody had to own. That's not the case right now. I mean, the last couple of weeks have been all about Tesla. The last couple of weeks have been all about, Bitcoin and things like that. And so I would say in Palantir and a bunch of stocks that people thought, hey, these might go into the Nasdaq. Hey, this is where the action is. It's been all about Google and Amazon. It has not been about NVIDIA. So, I mean, if you look, it's not just NVIDIA. I mean, AMD is down to 126. Intel broke $20 on the downside. So some of these chip stocks, NVIDIA actually did pretty well compared to AMD and Intel and a bunch of other stocks. So to answer your question, I can completely believe it.
Yeah. Broadcom just went dumb to the upside last week.
Yeah, the Broadcom move on Friday was stupid. Now, I don't really have anything on in there, but it was just, I watched it. It was just a freaking stupid move. And, that's another stock that's you can't play for a 25% move on $1 trillion company. There's no way that based on one earnings, a company could be worth $750 billion in the morning and $1 trillion in the afternoon.
Yeah, but Tom, this is a recurring theme. It's like we just need a reason to revalue all of these instruments on a nominal basis. When NVIDIA does this, when Meta does this, all of these stocks just need a reason to revalue 30-40% higher. It's insane. And it's not a one-off scenario anymore. This isn't an outlier. This is like everyone's just standing in line waiting for the turn to revalue 30% higher.
I agree with you that it's not a one-off. I do think that it is it's part of the mentality of this particular bull market. It is a bull market phenomenon. That's all. This would not happen in a different kind of marketplace. But right now, like I said, it's market sensational. You can't get enough. And if people believe that there's there's dollars coming in behind them, they don't care what they pay, which is incredible to me, but it exists.
Shout out to the chat. Just say it in the chat saying mega cap stocks are moving like meme coins, which is exactly right. That's a very good way to say it. Mega cap stocks are moving, $1 trillion companies. I can understand, a company that's worth, $3 or $4 billion going up, 25% from $4 billion to $5 billion, but from $750 billion to $1 trillion in one day, Yeah. I mean, this used to be the reason why you invest in a biotech company going through phase 1, phase 2, phase 3 trials.
Why would anybody ever invest in a biotech again?
Why? If you have some of the biggest 7 companies repricing 30% overnight, what the hell do you need the extra risk for?
Exactly. Why would you risk a company where you don't even? Yeah, it makes no sense whatsoever. Anyway, let's go to Pete. Right. We're running late already. Sorry about that.
Pete Molman.
Gentlemen, great to see you. How are you? All right, we got Pete. One. What's that? No, it's all good. It's all good. We'll keep it tight. We got one big week left, and then it's we've got that weird kind of, with Christmas and New Year's right in the middle of the week. Those are going to be tough weeks to trade, I think. Sometimes it surprises us, but we got 1 week. We got expiration on Friday. So curious to hear your guys' thoughts. I know it's usually Tom, am I right? It's got a bullish bias to it, this December expiration.
In the last 3 years, D's triple witching has been sharply lower.
Okay.
but it has historically has a bullish bias over the last 25 years. But in the last 3 years, this week has been very bearish. But I think there's something interesting here, Pete. We used to say, it's the holidays, it's Christmas, it's going to be dead, blah blah blah. In the world of electronic market making and stuff, I don't know. People watch Netflix at night and during the day they trade. They don't care. It's if the screens are on, the markets are open. I don't think it's the same thing as it was in the past.
Right. When everybody had to assemble, so to speak. But it'll be interesting to see how much, if we do get some event-driven stuff that actually causes us to move. I don't know.
I think it'll be quite the opposite. I would think that if anything causes this market to move, it'll be what the hell caused this market to move.
Right.
It won't be an event. I just don't see it as being an event thing. I don't think there are any more events left.
Right. No, that's what I'm kind of. It'll be interesting to see if we just continue to squeeze higher. If Bitcoin's any indication, we're about to crack all-time highs as we speak right now. So what? In the futures, 104,700. That has been the traditional risk-on piece. So are these dips in technology Bible dips? I don't know.
That's completely that's arbitrary, and that's you'll have to decide. For me, no, but right. For somebody else, for sure.
I agree, because I think your Broadcom example is perfectly placed, Victor. That is type of repricing. It's just so out of what anyone would expect as you can't say the norm, but it did what it did. But the ability for markets to do that right now just speaks to this lack of any two-sided trade on it. So I don't know if we continue on inertia to power through the highs, or because I don't see we got 3 central bank announcements this week. Fed is kind of set that they're going to cut. Bank of England is not going to cut, and then the BOJ is a bit of a wild card.
I don't think it matters. I don't think unless the Fed does something that's right, outside of the 25 basis points, which I don't think anybody thinks they're going to do. There's no reason to. You just put yourself at risk. You don't want to steal the headlines. You don't want to. Right now everybody's in job protection mode. You protect if you do what the market expects you to do, you protect your job. There's no reason to be a hero if you're a Fed on the Fed or central banker. There's zero reason.
So we take a look at dollar continues to be relatively strong. Euro actually bounced a little bit off the lows, but we got to a new low of below 105 in futures, down to about 104.30 in spot, 104.40 in spot. Aussie, Canada kind of sold off with FXI last week. Yen having a tough time too. It'll be interesting to see if the BOJ has any interest in tweaking their rates on Thursday to give the yen a little help here. It doesn't seem like they're that concerned, and everybody seems to be very comfortable going into this uncertain environment of our tariffs and trade. Hey, you know what? If our currency's cheap, it's cheap. All the better. So I think it's going to be tough to see the dollar sell off here.
I think all the risk is trying to play the dollar to the downside, because Agreed. I don't think there's any reward. And I think everybody is just sitting around waiting. You know what? Everybody's long. Everybody's short dollars. Everybody's long everything else. And I think the mentality is, well, we're not gonna short any more dollars, but there's no way we're flipping the cards here. So I think my positions, and I think most traders are sitting around short dollars, long every other currency in the world. And I think it's the right play, by the way. And I don't think anything in particular is going to move the market. When it starts to move, you won't have a chance to get in. I think it's one of those things. You got to just have it on, and when it moves, you'll be there.
Yeah, you know what? It's funny. I still think there's more room to be done in if we see a lower euro here.
Yeah, of course, there could be a little more room, but how much room is there? Is there enough room to offset the upside risk? It's not a question of. It's never a question of could they continue to go down another couple percent. The question always is what happens if could they go up 5% and down 1%? Then it's not worth the risk. That's the whole thing.
Great call on the treasuries. You covered them right at the top. Well done. Above 120 in the long run.
I reloaded on Friday.
I think that's right. You know what? I agree with you. I think that's the same thing. I started buying 2 years on Friday. I'm trading again. I'm buying the twos, and then if we do get a little bit of bounce, I'll sell some notes against them. So I'm basically kind of legging into a twos versus tens statement. Right? Exactly, Vic. Wasn't able to get below parity again. We're back at 10, 11 basis points. Maybe this is one that has a little bit of legs, and this is what I'm comfortable holding through the Fed announcement. So
I love the notes here, by the way, under 110. I haven't bought them yet because I've been buying the 30 years. And I bought a bunch of 30 years on Friday. Bought some here, bought some a little lower, bought some a little higher, up like around 1620, 1610, 1605. But I love I didn't trade the 10-year on Friday, but I love the 10-year here under 109.30, 109.20, not wherever. It doesn't matter. I didn't buy it yet, but I will tomorrow.
Right. Yeah. And it seems like they're definitely, I mean, as we talked about, they're in a range, but they gave back a lot of ground in a single week. So this seems to be a nice spot to be able to trade the range a little bit. Gold and silver, Victor, again, huge move to the upside last week, huge move to the downside. $2 up in silver, $2 down. We're right back to where we started, right around $31. I don't have anything on the pairs trade. We're wrapped around 85. Those are big moves, though. I mean, when we're having, $1.50 move in silver in a day is a huge move. Mm-hmm. But we're just, gold continues to find on any of these rallies, it finds sellers. And I think that's going to be the situation moving forward here. So if we do, I certainly wouldn't buy it down here at 26.70. But if we do get back up into that 27.50, 60 again, I would be comfortable selling these down, selling these for a little bit of pullback. And, wide strangles work here too. If you want to skew a little bit to the downside, I don't think this is going to fall out of bed, but I think this is going to be this. If they get anything that kicks this, where they get some flight and some upside, it's going to be met with sellers, unlike the previous trek up to new highs. So a couple of areas I'm taking a look at where I'm trying to be patient, but trying to find some engagement here during the week.
I wonder, just to put a bow on this, since you brought up the FOMC announcement, it seems like going into this, anyone that's watching the bonds already sees what the expectations are, but just to pull this out of price action, on last week's CPI, they effectively took the probabilities of a third cut next year. They started to lower those probabilities, and then on the PPI, they pulled it completely. So basically, there's a December cut priced, which we'll see this week, and then there's 2 additional cuts probabilities basically priced into next year, so that the Fed funds rate would be between somewhere 3.75 and 4. So likelihood you're going to get a cut, but the more important thing, in my personal opinion, is their dot plot or their fancy summary of economic projections. What is the Fed going to say about how much they're going to move in 2025? And if they listen to the market, it's going to be between 1 and 2 cuts for next year. That's what the implied curve is saying right now, Pete.
Right, and that's down from 7 when we were up at the peak. So that's it's a huge mark out of it. And again, wanting to play both sides, if they get down to closer to 1 or a push, then you got to kind of look at the other side of it. It'll be interesting to see.
Yeah, next year the cuts are going to be bearish, Vic, because the cuts are going to be a flight to quality.
Mm-hmm. Right. Right. Absolutely.
Totally anyway, we got to run, Pete. We're really late.
All right.
Sorry.
You bet, guys. We'll see you. Have a great day.
See ya. Ilya, welcome to First Call, my friend.
Thank you.
Ilya, I just because I want to have a little fun before we get into the macro meat and potatoes.
Yes,
the drones off the East Coast of New Jersey, domestic, foreign, or extraterrestrial?
The funnest version would be extraterrestrial.
If extraterrestrial and aliens are among us, it should have been a no-brainer that Elon was one of them the whole time. Everyone's going to look back and go, oh, duh, the guy running 8 different companies, trying to go to Mars, doing electric vehicles. That guy was the was sent here from somewhere else.
I watched a great anime feature this weekend that was scored entirely by Daft Punk. It was a crazy thing that they were screening in the city here, and the whole storyline was that every virtuoso musician ever, from like Mozart to Etta James to Bob Dylan to Daft Punk, all aliens.
What the hell's going on in San Francisco, Tom? Did you hear what he just said?
Yeah,
I went to a musical that was scored by Daft Punk.
That's right.
What the hell? And they said all the musicians were aliens. This is what they're doing in San Francisco, Tom.
That's right.
I like it. I mean, that sounds like fun.
Definitely.
I'm not a good alien person, but it sounds like fun.
I know you are totally you're totally no aliens. You
no,
idiot.
no. I mean no alien. No, you're exactly right. I am
front run that with some Sion dumplings, and you're good to go.
Yeah, I'm a no alien person for sure.
Oh, you need to sit down with Ryan Grace and ask him about Bigfoot. I'm telling you, give him 15 minutes. Give him 15 minutes and hear him out with open eyes, open ears, and an open heart. Ilya, how you feeling about risk going into this week?
It looks a little bit soggy here. It looks a little bit like. I mean, so far I'm in the Russell and it's falling, so that's working. Good.
Okay. Fair.
I haven't done anything else. I sold a little bit of S&P late last week as it kind of stopped moving higher, and Nasdaq is a freight train. It's going to have to show me more before I'm not afraid to get in front of it. But a lot of the momentum, especially on Friday, even in the Nasdaq, looked a little bit weaker. And I agree with you on the Fed. I don't think there's anything that they're going to do that's going to surprise anyone. It's what they're going to say in the forecasting. And the market has moved basically to like a cut and a half next year.
Mm-hmm.
So at this point, the Fed set 100 basis points in September for next year. They have to cut it at least in half. If they don't cut it in half, the market's going to get antsy.
Do you agree with what Pete and Tom just said, which was coming into this year, the expectation was 6 to 7 cuts. We were nowhere close. We're going to end up being 3 cuts at 20 around 100 basis points for the year. So we overestimated the number of cuts coming into the year. And then going into next year, the expectation is 1 to 2. Would you play the opposite side of that, which is the setup could be more cuts for the wrong reasons, which would be negative risk? Or am I saying something that's kind of crazy?
Well, this is the hilarious part.
Well, you're saying something that's crazy as of today.
As of today, yes.
We can fit the scenario next year.
Yeah, here's the hilarious part about it, right? And this is fun with efficient market theory. The Fed told you in December of last year there'll be 3. Market goes, no, 7. Then by April, March, the market's going, no, 3. Fed comes back in May, goes, we don't like it. And by June, it's 1. And then they quickly come back to 3, and then they go to 4. Fed's been right all along, but the market has been oscillating around them wildly. And that's normal, right? The market's reaction function is much shorter. The Fed is slow moving. They have a 2 to 3 year window for inflation. They're not going anywhere fast. They're not supposed to go anywhere fast. And the market is really jumpy and faster thinking, and that's what it's supposed to do. So what's weird now is that in September, everybody was on the same page. And now it's going to diverge again, and that's the risk to markets, is that the Fed won't be as activist in what they adjust versus what the markets have done. The markets have reached all the way back to the least dovish that they've been in months at this point. If the Fed comes out and says, you know what? Fine, it's not 4, it's 3. And the market goes, wait, what's wrong? And gets spooked.
Yeah.
Fun with efficient market theory is the least likely name for an American television pilot, just so you know, in the history of television. Fun with efficient market theory is not going to be
fun with efficient market theory.
It's not going to be
the pilot no one will pick up.
Exactly.
Scored by Daft Punk.
Sounds like a tasty show.
Yeah. Scored by Daft Punk. That's right.
All right, Ilya, so if you had to say, given your feelings, the backdrop of risk, and given the macroeconomic calendar, which isn't the most boring going into next week, there's some things on the calendar here. What 2 or 3 areas or 2 or 3 trades, 2 or 3 leanings do you have for position risk going into the week?
So I liked the pullback in gold toward the end of last week as a buying opportunity. So I put a little bit of that on. We'll see if it's right, obviously, but I think the really big news last week, forget all of the China stimulus, whatever, the market very quickly sniffed out that unless the government is spending, it doesn't matter. And so far, that's not the case. The really big story out of China last week was they restarted buying gold reserves in size, which means that there is now a non-economic buyer in the market again. And last time, before they paused, for 18 months, they were buying everything that wasn't nailed down in gold. So I'm interested in that. If they're back, really, this is going to be one way for a while. So that's good. And then as
an aside, before you go on to your next idea, I didn't buy the underlying, but I went to some of the miners. To me, there's a big divergence between the price of metals and where miners are trading. That could be appropriate, but I'm playing a divergence here, and I'm going long some of these miners. Anyway, sorry to interrupt you. Go ahead.
No, sure. I'm also looking at on the long side of the bonds, and I'm kind of talking my book here, but I think a lot of the shifting up of yields last week was basically the market getting ready for the Fed to do what they're going to do. And it's pretty obvious what they're going to do at this point. Since September, when they issued that very dovish guidance in September, that the market said, you're out of your mind, this is not going to happen. And that was a bottom in yields. It was a bottom in the dollar. Everything shifted to, you're not going to do all this. This is way too dovish. And for 2.5 months, 3 months, the market told them no. I think this last bit was sort of the end of that no. Now it's a buy the rumor, sell the fact kind of thing, it feels like. So the Fed will come out. They won't be nearly as hawkish as the markets think. Dollar comes off. Bonds go higher. And so I'm on both sides of the dollar now, but I'm long the euro and short the pound. That's been working. The pound side of it is more momentum, though. The euro side is more what I think yields will actually do, which is come down. So I'm long euros. I'm long the long end of the curve. I'm long gold. All of it sort of expects for hawkish speculation around the Fed to be essentially a letdown, to be a buy the rumor, sell the fact kind of a thing.
I do agree with you that the thing that nobody is positioned for is the Fed not accepting the market pricing of between 1 and 2 cuts for 2025, and then being a little bit more, in the world of 2 and 3. I don't think the market's priced for that.
And just slow walking it because they're not so jumpy.
I think if that happens, I don't see how that's good for the long end of the curve, though. I see if that happens, if they're more dovish, I think that longer end rates would go higher in that scenario, but we will see. Tom, we'll throw it over to you for the last words for all the traders out there as you go into the week before we close out the show. Final thoughts, Tom.
It's really funny. I have while I'm sitting here listening, I have a great discussion I'm going to have either next week with you or this week with Dylan on Elon, because I have a new theory. I have a new Elon theory that hasn't been brought up yet, which I think will piss off half our customers and make the other half think it's pretty funny. But
that's par for the course here, Tom.
I know. So I'm not going to do it on Sunday night, but I'll wait till either Wednesday or next Sunday. This is a triple witching, and the last couple of triple witchings have been incredibly weak, and I thought each one of them would be strong. This one, no different. I mean, we haven't even had a taste of, we're at 61.25 or 61.28 in the S&Ps. We can't even buy a 10-handle downtick. So I think this week is going to be, if it plays the way I think it's going to play out, they will try to be strong Monday, Tuesday, and I think Wednesday, Thursday, Friday, especially Thursday, Friday, have the potential to be weak. So I think strong early in the week and weak late in the week, as far as the S&Ps go. I think the biggest potential risk is Nasdaq, just because I think it's the most extended of all the indices. I think, ruling the Dow out, because most people don't trade Dow. I'm going to stay like in the Russell here. I really like bonds this week. So I think at 116, 10, 116.13 where they are right now, 116.12. You have maybe 16 ticks of downside, I think, and 2 points of upside. So I really like the bonds here. I'm long them. And as far as stocks go, I think it's a buy the rumor, sell the news. Tomorrow morning, MSTR and Palantir, they might not make highs on the opening, but they're going to get close in the next couple of days. And I don't think you can be long them after this week.
I'm telling you. I don't know about MicroStrategy, but Palantir, I'm not betting against that thing. There's drones. Have you been hearing anything I've been saying? There's drones off the East Coast. There's no way I'm fading AI and military technology.
I'll say this: if Palantir falls, I'm a buyer of it. I'm not selling it, but if it falls and it's on good discount, it might take a while. But anything that looks like it's on discount in Palantir, I'm a buyer.
First of all, when you say discount, the only time Palantir gets discounted if it goes back to $20. Okay, there's no such thing as discount. If it drops 20% here and goes to $60 or whatever, I mean, it's going to open at $80 something. If it drops 30%, is it cheap? I doubt it.
Yeah.
Oh, by the way, this is where I'm going to go out. I'm going to go out on, we tried to, in the green room before we came out, I asked these guys to make a market on a placenta, and nobody was close. Everybody was between $2,000 and $3,000. If I'm not mistaken, the market's $50,000 on those things. You can't keep them and sell them yourself, because that's how our system is set up here. But the market value.
That's why they're so expensive. Because if you could, they'd be a lot cheaper.
No liquidity.
That's true.
Yeah. I mean, come on, Victor. Kidneys will sell for a lot of money, but if you could sell your kidney, they'd be a lot cheaper.
My point is, before we came out, I found out if Tom was selling a placenta, I would buy it because he mispriced the hell out of it. I would buy Tom's.
I have to be honest with you. I did not know how to price it. I'm a pretty good market maker. I had no idea how to price a placenta.
Somebody put that on his shirt.
I did not feel comfortable making that market.
All right, everybody, that's going to do it for us. Hit the like button on your way out. Subscribe to the channel if you haven't already. And Tasty is streaming at least 12 hours every single day. So you make sure you come back tomorrow and check out all the great content we've got for you. We'll see you back here tomorrow, same in the morning at 1:30 Central Time. We'll see you back here for Ilya Spivak. I'm Victor Jones, Pete Ballmet, and the one, the only, the creator, the founder, the sun, the moon, and the stars, Mr. Thomas Sosnoff. This is Tastylive's First Call. We'll see you tomorrow. Peace.